Stock market today analysis for Wednesday, February 1st, 2023. Out with the old, in with the new. January is done. From what I've heard of, out of looking at 100 years of stock market data, that apparently 78 years out of 100, that out of 78 years in a 100-year data set, whatever happens in January, the rest of the trading year tends to mimic January. So we're done with January. We have an idea of what might happen. It's a fairly high probability. It's a 78% chance that we could expect to see the rest of the year play out similar to January. Now, this also means that out of this 100-year data set, 22 years out of those 100 did not play out like January. That's definitely a lower probability than we have over here. The thing with probabilities is that we never know when they're going to happen. For example, we don't know where these 78 years fell in this 100-year time period, and we don't know where these 22 years fell. And that is one thing that I found as being an option seller that I needed to get a firmer grip on this. Because let's say if I was doing an option trade that had, let's say, 78% chance of expiring worthless. That's almost an 80% chance of expiring worthless. It's a pretty high probability, right? There's only 22% chance that that option contract will expire in the money. And I can't remember where I heard this, where it was explained to me this way, but sometime several years ago now, it was explained to me that, yeah, it's true that it has a 78% chance of whatever happening, but this 22% chance, you don't know where it's going to go. You know, for example, let's put this off to the side for a second, and let's say something happens 1 out of 10, right? So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Well, let's say with this a little bit closer, 2 out of 10, right? But where are those 2 going to fall? So let's say you're getting ready to put on an option trade that has a, let's say, a 80% chance of expiring worthless, and you were to consistently do trades that had an 80% chance of expiring worthless. So out of 10 trades, 2 of those are going to expire in the money. Only 8 out of those 10 will expire worthless. But for some reason, as option traders, we tend to think it's going to be these over here, or it's just never going to happen. So I want to let you know, I am not doing nearly as eloquent of a job of explaining this as it was explained to me. But it's really just this idea that when you're looking at high probability things to happen, has a high probability chance of happening, even if it's only 1 out of 10, like even if it's 9 out of 10 chance of happening, you just don't know where that 1 is going to be. Is it going to be here? Or is it going to be here? Is it going to be here? You just never know. It just comes up at random spots, so at any time. So what's the point of all that? The point is it doesn't mean that this year is going to play out just like January. It could. And what did we have happen for January? Well, I made that video yesterday where we looked at monthly charts, and things like that. But overall, January, how did January play out? Well, we're looking at about 30 days, about 1 month of trading right here, right? 1 month, 1 day candle. So we see the VIX overall went down. We see the S&P 500 futures went up. We see it went up somewhat smoothly, right? Smoother than this. And we see the NASDAQ futures went up. We see the Russell 2000 futures went up. We had the most volatility over here in the Dow Jones. Right, the spot right here, the spot right here, the spot right here is the spot right here. The most volatility right there. But overall, everything is up. VIX is down. 10-year Treasury futures down. Crude oil kind of going sideways here. Pretty much in this range between, you can see here almost perfectly, about 72 to about 78. Natural gas came down. Gold has been up. Silver sideways. And Bitcoin up at the sort of towards the end of middle or end of January, really started going up. Now we're gonna look at general markets for the, not just for the day, we'll be looking at them for the month. And as I'm getting into that, I want to take the time to let you know that in the description of this video below, there's a link to I Have Success, and ihavesuccess.com. You can check out the mission, which is to help you begin your trading journey by learning how to sell cash secured put options. Yeah. I have a selfish interest in it. I want to do this in a way that helps me grow and improve in the process. And you can get any of these downloads, these first 2 downloads, in combination with a playlist that's also in the description of this video called like Trading Options for Beginners, with beginners in all caps. Those 3 things, the 2 downloads, that playlist, and let's add on a 4th at 7 minutes and 30 seconds. You can remember 7 minutes and 30 seconds, right? Because it's going to pop up right here. There it is. It's coming up. Get ready. 7 minutes and 30 seconds. You don't have to watch it right now. Boom. There it is. 7 minutes and 30 seconds. You can come back when this video is done and watch that. And that will give you 5 reasons, not how to trade cash secured put options, but why. Why? What's the benefit of starting? Now, you can get into other more advanced strategies if you want. If there was only one strategy that I was going to do the rest of my life, this is what it would be. So watch those videos. It will explain why. But ultimately, to give you the quick and dirty of it, because at contract expiration date, you're in a win-win situation, where pretty much any other option trade, you're in a win-lose situation. Yeah, you might break even, but we'll put breaking even on the side of win, right? So selling cash secured put options on a stock that you would be happy to own at contract expiration, you can only win. You either keep the premium, or you keep the premium and you buy a paper asset that you want to buy. So check that stuff out. I think that you would love to paper trade that and learn how to do it. Now let's look at these other things. Dollar really came down today, first trading day, and we had Jerome Powell talk. I listened to some people's commentary on what they feel like was said and all the stuff. Again, selling cash secured put options on stocks that you don't mind owning. It's quite a bit less reliant on what the Fed people say and all those types of things. It's more focused on, like, is this a company you wouldn't mind owning, and you just become an insurance salesperson on it. So if you don't want to pay attention to what these, in my opinion, doofuses are saying, then do a strategy where you don't have to depend on it as much. But the dollar really dropped down, and so what happened over in the course of January, though, not just today. Today we see it really drop down, but overall the dollar's been going down through the month of January, sideways for most of the month, but then really kind of dropped down today. So we see overall really dropped down. TLT, which is representing the 20-year Treasury bonds, went up for a certain amount of January, and then it's just kind of been going sideways. And TLT for a while has kind of been leading the charge for the markets. we'll see if that relationship is going to continue. We looked at gold, we looked at crude oil, looked at Bitcoin already. The VIX, right? Look at this. Hit the low for the last 30 days of trading, and over here it was the high. So we just see the VIX has really dropped down. We see that, which would only make sense because the VIX is basically based off SPX, that the low over here, like the high over here, and the high here. So we're definitely pushing into some bullish territory. Now look at this. We got showing a little bit of weakness here. Pulled back a little bit, but overall we see it's been going up. Kind of got up here to test this high in the Dow Jones and then pull back here. Seems to be hitting this resistance right in here. NASDAQ hit a high today, making it over that 200-day moving average, staying over it at the moment. And the Russell 2000, same thing, right? Low about 30 days ago, high today. So how's the market been looking over the last, January? It looks up, and it's had some volatility though, right? It's been like just kind of a up and down, but up, not like a smooth up like we see here. That was a pretty big drop off right here. Started off with a drops, got drop here. Just kind of wide range trading. Look at that, really dropped off here. So we'll look at our 12 sectors of the market. We see technology sector has been up. Healthcare sector basically has been down over January. The last 2 days getting a pop there, but overall here, right, that's down. Financials up with some volatility right there. Same thing for industrials, up, but same, that real volatile here. Basic materials up. Communication sector up. Retail up. Real estate up. Utilities down, which isn't really that surprising because it kind of seems like when people feel safe and like taking more risk, they'll flow out. Maybe not people, institutions. I don't know. I don't know exactly where that money's coming from, but this is kind of like known as a defensive sector. So maybe money started flowing out, or I don't know. Overall, it's just not up, right? It's down. For me personally, I think this is a good sector to sell cash secured put options on. It wouldn't be, you probably would not be in a bad position to have your dividend portfolio loaded up with some good quality dividend producing utility stocks. Consumer staples overall down. Consumer discretionary up, a lot of volatility there, and energy up, but kind of going sideways with some volatility there. So overall, over the course of January, everything's been up with a lot of volatility there, but it's been up with a lot of volatility. So we're going back to this line chart. I had been talking about how, like, looking at where prices kind of got, I don't know if you can see that, prices kind of got stuck in here. Prices were kind of getting stuck in here. And so this is kind of how I'm seeing now. Now it's not exactly to this dollar amount or line. It's a little bit of a, it's a bit of a range, but we got the 400, we got the 380. We got up here with this around the 420. And for all the people that laugh at that, haha, funny, 420, let's balance it out here for people that don't think 420 is a funny number, and let's give those people the 357. I definitely used to be a 420 person, while I've always been a 556. Now I'm just a 556. I just love 556. 357, that's pretty nice too, but tell you what, 556. Going back to those Marine Corps days. Yeah, I love me some 556. And so that's what we're pushing up here, right? pushing up to this part, and until it breaks through here and keeps going up, I'm thinking it's going sideways. I don't know how far it could go up, but it could. All right, how far could it go up? Well, technically, how high can you count? Can it go that? Will it go that high? Probably not, but technically, how high can you count? That's on the upside. That's why risk is infinity on the upside. So that's what we're looking at right now. We starting January off with a strong but volatile month, and let's see if we could see if I can do this without messing it up too much. Let me see, 1 month. All right, so it looks like, oops, whoopsie, let's bring that back. All right, here's our 1 month. This is a weekly line. We can go like this. Let's change this time frame to day. So this is what price action has done. That's pretty volatile, right? It's not straight up, but it's definitely a up month. Low, higher low, higher low. What number is that right in here? Kind of right in there, right around the 400. And then we got a pivot here around 405. So if prices pull back, let's say they pull back to somewhere in here. Let's say they pull back to, I wouldn't be surprised if prices pull back to 405 and maybe gain some support there. Like what might be expected if the bull is going to continue. It wouldn't be unreasonable for prices to pull back to about 405 and then go up. But if prices pull back deeper into here, then we want to, if you're a bull, you want to see it maintain some support right in there. Now it could go a little bit lower and go up, kind of like that. But if prices break this support and they break this support, you got a little bit of a wiggle room right in here. Right? If they start breaking, you want to see how far it's going to be broken down to. Again, if you're looking at around a 78% probability that this year will play out like January, there's January, then we could potentially expect volatility and more movement to the upside, because it was definitely more up than down. And let's see how it goes, right? Let's see how this year is going to play out. So what can you do though? What can you do in order to attempt to keep yourself from losing too much money, or losing any money at all, actually? I would suggest paper trading. That's going to be the #1 thing. Paper trading. Stock market has been around for at least 100 years. It's going to be around another 100 years, right? You don't have a rush. The thing that's time in a way is on your side, because even though you're not guaranteed to wake up tomorrow, if you do wake up tomorrow, like, you have another day. But you're not really guaranteed the money either. But even though it's easier to get more money than it is to get time, they're not really related, but definitely, they say time is money. And in the stock market, I guess this is what I'm trying to get at. In the stock market, if your account goes to zero or close to it, or if you lose a certain amount of money, you might not be excited to be trading, right? So paper trade. And then when you feel comfortable with what you're paper trading, you can consider doing it with real money. And just be really careful, because I've done it a few times myself, but I've seen more people just totally stop trading from losing money. They were all excited, but there's been times where I would stop trading for months because I lost money. And next thing I know, I just don't want to open my brokerage account. So learn from my mistakes. Luckily for me, I'm in love with this, so sooner or later I come back, and I just developed that. That's one reason why I sell a lot of cash secured put options on stocks I don't mind owning, because I have a busy, like so basically working 6 days this week, almost seven, and depending on what you define work by, I'm answering text messages and emails and things like that basically every day. So I don't fully have a day off, and I don't know what your life is like. And I live in the Hawaiian Standard Time, and I don't have a well, really. I wouldn't consider the last time I felt like I had a day off was New Year's Eve and New Year's Day, because no one in my department worked. Like our whole company was shut down. So no one called me. No one needed something from me, and I had a complete day off. So for me, having pretty decent job that requires my time and energy, I like to put on trades that I don't really have to worry about. So consider doing something like that. Now, I still put on trades that I do have to worry about, and sometimes they win, sometimes they lose. And when I try to manage my life in such a way where I'm putting those trades on, trying to put those trades on in, considering what's going on with my work schedule and my life and things like this. So that way I have the time to manage those, and I'm not going to be like traveling for work and need to be managing a bunch of, or even one, like I don't, I know that losing money is an expense. It's a part of the game, but I'm trying to minimize that as much as possible. I'm not just accepting losses. So if something needs to be adjusted, it's sometimes difficult to do it when I'm on an airplane or on the island of Kauai with some of the worst internet reception I've experienced in the last 10 years. So you do you figure it out, but that's what I would recommend. Watch the playlist, the 3 different playlists in the description below. Get those downloads over at I Am Success. Watch that video at 7 minutes and 30 seconds, and you guys have a fantastic day. Aloha.